What's up, everybody? Steve here. Has the housing crash started? I believe so. I'm going to talk about an article talking about a specific area in the United States that is seeing a sharp decline in values. And before I get to it, I do want to preface that everything with real estate is micro in nature. So what's happening in Boise, Idaho might not be happening in, say, Miami, Florida. So it's important that we're not looking at the real estate market as a blanket as a whole, because everybody's in a different market cycle, and some markets, frankly, have not necessarily increased rapidly with appreciation like others. So I think we need to take any other information as a grain of salt when we hear housing crash and so forth. But let's check out this article here. So this is from Zero Hedge. Boise, Idaho, pandemic-driven housing boom begins to crack. Cracks in one of the nation's hottest housing markets could be an early indication that the virus pandemic work from anywhere housing boom could cool as mortgage rates soar and affordability becomes an issue. Now, as I'm doing this video, interest rates right now are mortgage interest rates are 5.35%. That is going to have an effect on the real estate and real estate values, no matter how you look at it, because it increased the cost of that expense. If you're wondering where the U.S. real estate market might start to show its first cracks, keep an eye on Boise, Idaho. Boise saw a massive influx of Californians purchasing homes in the region. Now the rush could be stalling. Zillow data shows the average home price in Boise rose just 0.4% in March, down to 4.1%. I got a little note here. I believe April's figures are going to come out, and it's probably going to show a net decline. So I look forward to actually seeing the figures on that. If we look at this little graph here too, you can see a sharp decline here. The slowdown is hitting some western mountain towns, but it's also likely to catch up with Austin, Texas, Phoenix, and Tampa, Florida, among others. Boise home prices being a staggering 70% over what prices are deemed affordable to the median household income in the area, thanks basically to Californians for moving into that area. And also, something that we really need to take into consideration is in any of these areas where mass migration moved into the areas, the everyday Joe needs to live there. So where do they go? So when prices are driven so high and you have rent rates driven so high, the average guy that's just working in the restaurants or the mechanic or whatever the case is, that's making okay money, a lot of their money is going to the place where they live. So if it gets too high, then it's just not sustainable. And it goes on to say it's making it harder for first-time home buyers and locals to afford housing. The incredible pace of gains is just not sustainable, and slowing demand can suggest prices will eventually reverse. Zillow's senior economic Jeff Tucker said the cities that experienced the largest house price gains due to migration flows would be hit the hardest in a downturn. I'm located in Southwest Florida, and we are seeing that once again. And we are in a very cyclical market here, and even showed in the last real estate recession, we got hit very, very hard. Even areas around here like Lehigh Acres was named by a lot of mainstream media as ground zero for the real estate crash. Last week, the average 30-year mortgage rose above 5% for the first time in a decade, threatening to cool down nation's red-hot housing market. I hate when they say hot housing market, red hot. Anytime I hear that, I'm like, it's not good. It's definitely not good. It means it's a manipulated housing market. Bank of America economist Alex Lynn recently showed clients that housing affordability is now at the lowest since 2007, about a year before the housing bubble imploded. And you can look at the affordable index graph here. I'm going to drop the link for this article below so you guys have access to it as well. National Association of Realtors estimated that 9 million home buyers have been priced out of the market this year because of higher interest rates. We even pointed out that cracks have already shown up in overall markets as sellers reduce asking price this spring season. There's also a slowdown in pandemic-driven second home buying. I did another video on basically sellers are reducing prices. We're seeing it in Southwest Florida here. And they mentioned second home buying as well. I did another video on the additional tax that people are getting nailed with if you're buying a second home, which I hate government intrusion when they do this, because that will hurt any kind of growth as well. And I don't think it's just higher interest rates, but it was up to like a 3.4% tax, and it's going to basically offset affordable housing. Whether that trickles down into these neighborhoods, we'll see. I doubt it, but you know, the less people buying homes is going to be less money that would even go to that cause. Maybe mortgage rates provide some insight as to what may happen to housing prices next. As you can see, mortgage interest rates and housing, a little bit of plummeting right there. Boise's cooling may suggest some of the hottest housing markets post-pandemic could be due to a slowdown, or worse, a reversal in prices. Now, I also did another video on, I did not think that we had this mass shortage of homes. And I think that truth will come to fruition, because I don't think we have a huge shortage of homes like they're talking 3 to 5 million. If you look, and I did, you know, one kind of small study on this, but if you looked at our housing market pre-pandemic, we had houses and condos expired listings, right? So meaning that these properties, they were on the market for 6 months, even longer, and then nobody bought them and they went off market. Now, when the pandemic started to happen and interest rates went down, there's a lot of liquidity in the system, there was a limited amount of inventory because of this, and we personally went after the expired listings to get for ourselves as well as for clients, because you know, it was just basically kind of a hidden gold mine where you didn't have a whole lot of people going after the same properties. But if you just look at what happened prior to the pandemic, properties were expiring. People were not buying them. And that same property, for an example, you know, expired at $450,000. Now, you know, if I put that same property on the market in today's market for, you know, $650,000, $675,000, it would probably sell right away. So I think that we're eventually going to see a lot more inventory come to market, a lot more brand new construction as well come to market. Time will tell. I might be wrong, but just looking at the past and what kind of market we came into, I don't think we're in this as big of a housing shortage as it's led on to believe. Anyway, if you guys like this kind of content, you're not subscribed, I appreciate it if you considered it. And I appreciate every subscriber on this channel. Thanks for being here.